Yes. So till now we have discussed 7 problems on holding company accounts. So now let us see the problem number 8. Prepare the consolidated balance sheet based on the balance sheet as on 31st 3 2015. So if you see here, asset side, sundry asset information is given, sundry asset information is given, stock is mentioned, debtor is given, bills receivable. Okay, bills receivable, if there is any intercompany transaction, then there is an adjustment. 15,000 shares in Yes Limited at cost, they have said. So we know 15,000 shares are invested by holding company in subsidiary company. So this 1,50,000 is nothing but the investment amount made by the holding company in subsidiary company. So if you see the subsidiary company share capital, it is 2 lakh, and paid up value if you see it is 10. So number of shares in subsidiary company, that is 2 lakh divided by 10, if you do, you will get 20,000 shares. 20,000 shares. So out of this 20,000, 15,000 belongs to holding company. That means 15,000 is majority. Remaining 5,000 belongs to other third parties or outsider. So that 5,000 becomes minority. Then asset side, no other information is given. Only these 5 information: sundry asset, stock, debtor, bills receivable, and investment made by holding company. If you see liability side, share capital rupees 10 is fully paid, it is given. Then reserves mentioned, profit and loss account is given, creditors information is mentioned. So here we want share capital of subsidiary, reserves of subsidiary we want, profit and loss account of subsidiary we want. And now let us see the adjustment after discussing the problem. So now see the, and one more information given in the liability side is bills payable. Bills payable information under subsidiary company column, it is mentioned 30,000. Yes. So in the asset side there is a bills receivable, in the liability side there is a bills payable. Now let us see the adjustment. Now there are 4 adjustment is given to this problem. All the profits of subsidiary company has been earned since the shares were acquired on 1/4/2014 by holding company. So that means what? Can you tell me whether there is a pre-acquisition profit or whether there is a post-acquisition profit by seeing the adjustment? Can you tell me now? Yes, tell me whether there is a pre-acquisition profit or whether there is a post-acquisition profit. Yes, tell me. After the acquisition of share, there is a profit. They said, see this, all the profit of subsidiary has been earned since the shares were acquired. That means whatever the profit available becomes post acquisition profit. That means whatever the profit given in the balance sheet, entire profit of subsidiary company is post acquisition profit. But there was already a reserve of 60,000 at that date. So now let us see the reserves of subsidiary. Reserve of subsidiary is 60,000, and this 60,000 was there before the acquisition or on the date of acquisition. That means what? All the reserves are pre-acquisition reserve. So there is no post-acquisition reserve in this problem. Similarly, there is no pre-acquisition profit in this problem. So that is about adjustment number 1. Now, after this, there is one more adjustment. If you see, that is bills accepted by Yes Limited, rupees 10,000 are in favor of H Limited. So, bills accepted by Yes means here subsidiary company is going to pay the amount to the holding company. So, now bills payable of subsidiary company, if you see, it is 30,000. Bills receivable of holding company, if you see, it is 10,000. Adjustment given in the balance sheet, adjustment given in the question, that is 10,000. So this 10,000 you need to deduct from bills payable and also from bills receivable. So now this is very clear. Now after this, sundry assets of Yes Limited are undervalued by 20,000. So now let us see the sundry asset now. Sundry asset means it is a total asset of Yes Limited given in the balance sheet is 1,20,000. They are saying it is undervalued. Undervalued means 1,20,000 is not the original amount. So what is the original amount? Original amount is nothing but 1,20,000 plus this amount 20,000. That is the original amount. But here it is undervalued and shown at 1,20,000. So that is one more thing. So whenever there is a undervaluation of asset, what we have to do? We have to do revaluation. So when there is a revaluation, we have to see whether there is a profit or loss. If there is a profit, we have to divide between minority and majority. If there is a loss also, we have to divide between minority and majority. And whenever there is a loss, from minority interest you have to deduct, because all other things, that is shareholder fund, then profit and loss account information, reserve, all are positive in nature. That is why if there is any loss, you have to deduct. Then if you see the fourth adjustment, the stock of H Limited includes 50,000 bought from S Limited. So here if you see, S Limited subsidiary company is supplying the goods to the holding company. That is clear. What is the worth of the good? 50,000. At profit to the later. So who is making the profit here? Subsidiary company is making the profit of 25% on cost. But we want selling price information. Here cost price is given. We want selling price. How to calculate the selling price? 25% on cost is equal to 20% on selling price, or else you have to do 25 divided by 125, or else you can do first convert this into fraction. 25% means in fraction how much? 1 by 4. To the denominator add 1 plus 1. So now the fraction becomes 1 by 4 plus 1. Now the fraction is 1 by 5. So 1 by 5 convert into percentage. 1 by 5 in percentage is 20%. So now it is very clear, 25% on cost is equal to 20% on selling price. So this problem is very simple if you understand the adjustment. Yes. So after discussing the problem, now let us go for the solution part. So before doing the solution, there is one note for understanding. It is given that sundry assets are undervalued by 20,000. Hence, it is to be revalued. So why it is revalued? Because the figure shown in the balance sheet is not the proper one. That is why revaluation is necessary. On revaluation, there is a profit of 20,000. How we know that there is a profit of 20,000? Because asset side, now sundry asset under subsidiary company column, in the question, it is given 1,20,000. Actually, it is 1,40,000. 20,000 less they have shown. That is why now we can easily understand there is a profit of 20,000. The revaluation profit should be distributed between minority shareholder and the holding company in the proportion of their holding. So here, what do you mean by holding company? So holding company is nothing but majority shareholder. Holding company is nothing but majority shareholder or majority interest, and other thing, outsider, is known as minority shareholder or minority interest. Yes. Then one more thing is given, assets are capital in nature. So whatever the profit arises because of the revaluation becomes capital profit. Why assets are capital in nature? Because assets are kept in the business not for the purpose of sale, and it is kept for usage. It is kept for day-to-day usage, and it is kept for longer duration. That is why it is capital in nature. So revaluation profit is equal to capital profit. Capital profit, according to the accounting standard 21, you should treat capital profit as capital reserve. So that is one more thing. Yes. So now working note we have to do like we did in the previous problems. So first one, calculation of pre-acquisition and post-acquisition reserve. If you see the adjustment there, they have mentioned, that is, there was already a reserve of 60,000 on that date. So acquisition date of the problem is 1/4/2014, that is beginning of the financial year. So whenever it is at the beginning of the financial year, you need not calculate current year profit or current year loss, because it is not somewhere in the middle of the year. So now if you see, reserves of subsidiary given in the balance sheet, that is 60,000. Out of 60,000, entire 60,000 was there on the date of acquisition, means entire thing becomes pre-acquisition reserve. So there is no post-acquisition reserve. Why? Because 60,000 minus 60,000 is nil. Now, second working note, calculation of pre-acquisition and post-acquisition profit. So now once again we'll look at the adjustment. So they said all the profit after acquisition. Since the shares were acquired, that means whatever the profit given in the balance sheet, entire thing under subsidiary company column, profit and loss account, 1,20,000 becomes post acquisition profit. So now you see here, pre-acquisition profit is nil, post-acquisition profit, entire profit of subsidiary company, that is 1,20,000. That is working note number 2. Now after doing this two working note, next thing we want is majority minority ratio. So majority minority ratio, first thing we need is share capital of subsidiary. So let us see the share capital of subsidiary. See this, it is given as 2 lakh. 2 lakh, now paid up value is 10. So 2 lakh divided by 10. So how many shares are there, or what is the number of shares available in subsidiary company? That is 20,000. So out of this 20,000, if you see the asset side, 15,000 shares they have given. Once again, we'll look at the problem. See this, 15,000 shares in Yes Limited at cost they have mentioned. So 15,000 we know it is a majority. So 20 minus 15 remaining becomes minority. That is 20,000 minus 15,000, 5,000 becomes minority. So now we want majority minority ratio. Majority amount we know, minority amount also we got. So 15,000 is to 5,000. Simplify this, all 0 gets cancelled. 5 ones are 5, 3 is so 3:1 is majority minority ratio. So now 3 plus 1, there are 4 units. We want it in fraction. So majority fraction is 3/4. So what about minority fraction? Minority fraction is 1/4. Yes. Now after knowing the fraction, we can easily calculate majority minority interest. So now let us see the calculation of minority interest. So for minority interest, we know we want share capital of subsidiary, total reserve of subsidiary, total profit of subsidiary. So now fraction we know, that is why first point is 1/4 share in share capital. Share capital given in the balance sheet, that is 2 lakh. So 2 lakh into 1/4. So you will get 50,000 as your answer for the first point. Second one, 1/4 share in total reserve. So total reserve, if you see 60,000 given in the balance sheet, so entire reserve is free, so doesn't matter. Anyways, we want total reserve, so 60,000 into 1/4, you will get 15,000. That is answer for second point. Then there is 1/4 share in total profit. Again, total profit, entire thing is post-acquisition profit. Suppose if there is a pre-acquisition as well as post-acquisition profit, we have to add both. Why? Because for minority interest calculation, we want combined. That is pre-acquisition profit plus post-acquisition profit. We want total profit. In this problem, total profit given in balance sheet, that is 1,20,000. Entire thing is post, that is why 1,20,000 into 1/4, 30,000 is your share in total profit. So these three things are common for every problem, but in this problem we know that there is a revaluation profit. Why? Because sundry assets are undervalued. So there is a profit of 20,000. So this has to be shared between majority and minority. So 20,000 into 1/4, that is 5,000. We want total minority interest. So add all the information: share capital, reserve, profit, and revaluation profit. So add all these, you will get total minority interest as 1 lakh. So this 1 lakh you have to show in the liability side of the balance sheet separately. Why? Because this information belongs to outsider and holding company is not interested in outsiders information. That is why it still remains as a liability in the consolidated balance sheet. So that is calculation of minority interest, working note number 4. Now after doing this working note, we have to see the working note for majority interest. Calculation of majority interest, there is ratio, we know 3 is to 1, that is why fraction is 3 by 4. 3 by 4 share in share capital. Share capital, we know what share capital we are talking about here. A share capital of subsidiary we need. So share capital of subsidiary is 2 lakh. 2 lakh into 3 by 4, you will get 1 lakh 50,000. And you know this 1 lakh 50,000 is a paid up value. That is the actual amount available in subsidiary company. So on this amount, we know what is the investment made by the holding company. That is also 1 lakh 50, and the actual amount available is also 1 lakh 50. So in this problem, there is no profit, no loss. That is why there is no goodwill and no capital reserve. So this answer you have to set off against investment. For this separate working note is there. Then now second point, if you see third 3 by 4 share in pre-acquisition reserve. So in this problem only one type of reserve is there. That is the entire thing is pre-acquisition. Pre-acquisition, that is total reserve itself is a pre-acquisition reserve. So 60,000 into 3 by 4, that answer is 45,000. And since it is pre, you know that is long term in nature, you have to write this as capital reserve. That is second point. Now after this, there is no post acquisition reserve, so no need of writing that. Then there is no pre-acquisition profit, no need of writing that. Now third point, 3 by 4 share in post acquisition profit. Post acquisition profit is nothing but total profit, entire amount is post acquisition. 1,20,000 into 3 by 4, if you do, you will get 90,000. This is after the acquisition. So we know the duration here. Duration is within 1 year. That is nothing but one financial year. So usually it is less than 1 year or 1 year. That is why it is a revenue profit. So whenever it is a revenue profit, this information you have to show in the consolidated balance sheet, where you are going to show under profit and loss account. There is a holding company profit and loss you have to write. After that, there is a subsidiary company column. There you have to show this amount. Now after that, there is a revaluation profit. So we have already distributed revaluation profit to the minority. Now we have to do the same for majority. 3 by 4 share in revaluation profit. So revaluation profit is nothing but undervalued information. That is 20,000. 20,000 into 3 by 4, that is 15,000 you will get. Again, revaluation profit, we are dealing in asset, so assets are capital in nature. That is why we have to treat this as capital profit. Whenever there is a capital profit, as per accounting standard 21, it is capital reserve. So this is point number 4 under majority interest. Yes, so I hope you all understood till here. Working note 1 to 5. Yes, any doubt regarding these 5 working note, you can ask me now. Tell me if there is any doubt, you can tell me now. Akamsha, Amrita, Anusha, Ashish, Disha, Kuchal, Nishant, Omkar, Pooja, Pratish, Shifali. Yes, tell me if you want to ask any doubt, you can ask me now. Tell me. I hope till now you understood this problem. I hope this nothing is there in this problem. Very simple problem. So I hope everyone understood. So no answer. So I'll assume that everyone understood this one. So now let us continue. That is calculation of cost of control. So now that is working note number 6. So now if you see cost of investment. So cost of investment given in the balance sheet asset side. If you see here, where it is given, yeah, see this 15,000 shares in yes limited at cost 1,50,000. So this investment made by holding company, we know 1,50,000, and paid up value we have to deduct from investment. For that we have to see majority interest. First point, see this is a paid up value 1,50,000. So here calculation of cost of control is nil. That is cost of investment also 1,50,000. Paid up value also 1,50,000. So cost of control becomes nil. That is working note number 6. After this you have to set off capital reserve against goodwill. So now capital reserve calculation you have to see majority interest working note. Total capital reserve, we have to see majority interest working note. So wherever you have written capital reserve, you have to consider that information. So pre-acquisition reserve, capital reserve. So 45,000 plus 45,000 plus, then there is a revaluation profit, capital profit. Capital profit is equal to capital reserve. So 45 plus 15,000. So what is the total capital reserve? Total capital reserve is 60,000. So 60,000 less total goodwill. But in this problem, we got cost of control or goodwill as nil amount, zero amount. That is why goodwill is nil. So negative balance, net capital reserve is 60,000. So now this is clear. This 60,000 you have to show in the consolidated balance sheet liability side. That is point number 7 or working note number 7. After this, there is elimination of intercompany holding. So if you see intercompany holding, first we have to see the adjustment once again. So let us see the adjustment what they have given. See this. The bills accepted by yes, rupees 10,000 are in favor of H. So yes is going to pay to H. That is why what happens here? From bills payable you have to deduct 10,000 and from bills receivable also deduct 10,000. So in the consolidated balance sheet there is no bills receivable. Why? Because actual amount available in the balance sheet is 10,000. If you deduct 10,000 from that, that becomes nil or zero. But you have to show bills payable in the consolidated balance sheet. That is 30,000 minus 10,000. 20,000 bills payable appears in the consolidated balance sheet. So now let us see that intercompany holding bills payable of H Limited not given in the problem. That is why nil. Bills payable of S Limited given 30,000. So total bills payable we want, that is 30,000 less intercompany is 10,000, so total is 20,000. That is total bills payable. If you see the asset side, bills receivable of H is given in the problem 10,000, but bills receivable of subsidiary is not mentioned. Bills receivable of subsidiary is not given in the problem. That is why total bills receivable 10,000 plus a nil amount, that is 10,000 itself, less intercompany, that is 10,000, total, that is nil. So there is no bills receivable in consolidated balance sheet. That is working note number 8. After this there is unrealized profit information. So that is given at 25% on cost. So once again we'll look at that adjustment. So see this. So stock of H includes 50,000 bought from S. So your holding company has 50,000 unsold stock. Whenever there is unsold stock, there is unrealized profit. So amount we know 50,000, percentage we know 25% on cost, but we want it on selling price. Since it is already discussed, 25% on cost is equal to 20% on sale. Or else you can do 50,000 into 25 divided by 125, or else you can do this 50,000 into 20%. You will get 10,000 as unrealized profit. This unrealized profit you have to deduct from both the side. That is, one is from asset side, from the stock you have to deduct unrealized profit. That is after adding total stock. Total stock means subsidiary company stock plus holding company stock. Similarly, if you see profit and loss account information, there also you have to deduct unrealized profit. This is working note number 9. Then there is no other working note in this problem. There are total 9 working note. After doing these working note, last thing we have to do is consolidated balance sheet. So now let us see the consolidated balance sheet. Consolidated balance sheet of H and S Limited as at 31st 3 2015. So you know here combined information we have to write sundry asset, stock, debtor, bills receivable. So once again we'll see the question. Sundry asset information, if you see what they have given in the question, see this. Sundry asset is 8 lakh for holding, for subsidiary 1 lakh 20,000. Combined amount we have to write. So what is a combined amount? 8 lakh plus 1 lakh 20,000. But if you see here, subsidiary company we have taken 1,40,000. Why? Because in this problem, sundry asset is undervalued. After that is revalued. That is why now the amount is 1,20,000. Subsidiary company plus 20,000. So 1,40,000. So total sundry asset now 9,40,000. It is very clear after revaluation of asset. Now, stock information. Similarly, stock information holding given in the balance sheet 6,10,000, subsidiary given 2,40,000. From that, you have to deduct unrealized profit, working note number 9, 10,000. So now total stock remaining, that is 8,40,000. Debtor. What about debtor? Holding company debtor is 1,30,000, subsidiary company debtor is 1,70,000. No other adjustment in this problem. So directly total debtor is 3,00,000. Bills receivable is nil, that we have already discussed. 10,000 minus 10,000 intercompany dealing nil. In this problem, there is no goodwill. That is why asset side no information about goodwill. This is about asset side information. Now, if you see the liability side, share capital. Share capital of 10 each of H Limited only. Why H Limited only? Because subsidiary company share capital is already adjusted and it is divided between majority and minority. That is why subsidiary company share capital doesn't come in the consolidated balance sheet. So only holding company share capital you have to write 10 lakh. Then reserves. Reserves of H Limited you have to show here 1 lakh. What about reserves of S Limited? Why we have not taken reserves of S Limited? But in this, why? Because in this problem there is no post acquisition reserve. Only if there is a post acquisition reserve, that becomes a revenue reserve or a revenue profit. And whenever it is a revenue profit, what happens? You have to show in the consolidated balance sheet. In this problem, no information. That is why only holding company reserve we have taken, that is 1 lakh. Next, profit and loss account. If you see holding company profit and loss account, that is given in the balance sheet 4 lakh. Subsidiary company, you should take the information by seeing the majority interest working note. If you see the majority interest working note, once again, there is a revenue profit you have written. This information you have to take, that is nothing but post acquisition profit. 90,000 you have to show under subsidiary company column. So now total profit and loss account is 4,90,000. From that you have to deduct unrealized profit 10,000. So total P&L, remaining P&L, that is 4,80,000. Creditor, no other adjustment. Directly holding company 2 lakh, subsidiary 1,20,000, total creditor 3,20,000 directly from the balance sheet. Bills payable, what about bills payable? 30,000 given in the balance sheet, but there is an intercompany. Intercompany, see this here, very important. There is a correction in the problem. 30,000 minus 10,000. So you have to correct in the notes, that is 30,000 minus 10,000. Why? Because intercompany both the side you have to deduct 10,000. Mistakenly typing error 20,000 I have taken. 30,000 minus 20,000. Remaining balance of bills payable is 20,000. Minority interest we have already calculated. That total amount we have to write by seeing the working note 1 lakh. Capital reserve we have got that information also we have to write by seeing the working note 60,000. Total balance sheet figure is 20 lakh 80,000. Any doubt regarding this problem?